Right. I think we will get started. People will keep popping in. We have 37 now. That's good. This will be an interesting experiment. For those who don't know, I am actually sitting at the Bizzuto Center for Entrepreneurship. And part of the reason I'm here is to make sure I have a good internet connection. But what struck me as I sat down today was that my background here is relevant to the economics department. And I'm wondering if anyone has any idea why. So if I look over there, does anyone have any idea who possibly could have painted those and contributed to those paintings that are on the wall? See, I can't help, the teacher in me just comes out, and I want answers. Somebody that many of you probably had as a professor painted those paintings back there. Any takers?
McKinnon?
No. Who'd you say?
McKinnon?
No.
How far back?
He retired just a few years ago, like 5.
McGuire?
Nope. He never retires. So that's interesting. He taught intermediate micro.
Jeff.
Jeff Gilbert is a modern painter. And that always amazes me because I just had no idea until he retired. And he has a loft downtown and he paints. So just a little bit of trivia. Okay. So welcome all today. It's nice of you to join us. My name is Tom Drennan, and I appreciate you joining with us this afternoon. I am a professor of economics, environmental studies, and the chair of the entrepreneurial studies program here at HWS. I recognize many of your names. Joining me today for this webinar are 3 of my colleagues, Jenny Tessendorf, Faisal Khan, and Josh Greenstein. And I'll introduce each of them in a moment. We're going to, basically the idea is we're going to talk about how we are addressing the impact of the pandemic as it relates to our overall course topics this term. We're teaching a variety of courses, and we thought it would be interesting to kind of share what we're talking about in the classroom. So before we get started, just a few housekeeping details so that we can have the best possible experience for everyone. So that everybody can hear, we've muted all the microphones to limit the background noise, and we ask that you keep them muted unless the professor asks you a question, and then we expect a response. If you have questions, please use the chat feature down on the bottom of your screen. If you click on chat, you can type your question. I'm going to try to keep, I'm going to moderate this and keep track of those questions and ask our various colleagues as they're speaking. I'll bring up the questions and ask them, and hopefully we can get through all of the questions. So let me just take a moment to introduce my 3 colleagues before we get started. So first we have Professor Khan, who joined us in 2000. Faisal teaches intermediate macro, principles, comparative economics, economic development, and money and financial markets. Professor Tessendorf joined us in 2001 and teaches many of our sections of our principles class, as well as international trade, and usually teaches a first-year seminar. Joshua Greenstein joined us in 2015 and teaches intermediate micro, statistics, and the economics of inequality and distribution. And again, I'm Tom Drennan, and these days I'm teaching usually a first-year seminar, and I teach quantitative tools for the entrepreneurial studies program. I teach environmental economics, and I teach natural resource and energy economics. Okay, so again, with that, what we're going to do is we're going to let Jenny start. Each of us, what we're going to do is we're going to each talk for about 5 minutes, giving you an overview. As questions come in, I will try to direct those questions to the speaker, and hopefully we can have a really good conversation today. Okay, Jenny, why don't you go ahead?
Okay, I will unmute myself and start my timer because Tom has us organized. Okay, so I have two classes this semester. I'm teaching Principles of Economics and International Trade. So let me tell you a little bit about the Principles class first. As everything was heating up in the US, we were just starting to talk about macroeconomics in the Principles class. So as you can imagine, as we started building our model about how the economy works and aggregate demand and fiscal policy, we were talking a lot about specific federal and state programs that were being implemented as we went along. So we talked about how the stimulus checks, state tax holidays, the CARES Act, payroll protection programs, expanding unemployment benefits, how all of that fit into the model that we were working with. And then, of course, as we added monetary tools to the model, we spent a lot of time talking about what the Fed is doing right now, as well as comparing that with what they do in more normal times and what they had done during the last financial crisis. And I had a bit of an advantage because I am married to one of the other speakers who teaches money and financial markets. So I made him come in and talk to my class a little bit in detail about what the Fed was doing because, you know, he couldn't tell me he was too busy. So we had a lot of opportunities to apply what we'd been studying, and that was true for the microeconomic side of the course as well. So for instance, we had already talked about the oil market, partly because I have a nifty graph that Tom had given me a couple of years ago for the global supply curve, and partly because when we get to cartels and game theory, it's always nice to use OPEC as an example. So when those futures for West Texas Intermediate crude went negative, it gave us a great opportunity to talk about what was happening with both supply and demand in the US and globally, right? So for the last week of class, I asked my students to find a news article on some economic effect of the pandemic and use something that we had studied this semester to analyze it. And they came up with some great ones. One of my students had an article on the potato glut in Belgium, because you probably know, you probably saw the stories, Belgium is the highest consumer of pomme frites, right? More French fries per capita are eaten there than anywhere else. But apparently, no one likes to make them at home. So because all of the restaurants were shut down and nobody was going out and eating them, farmers have them rotting in the fields in Belgium. Several students had really nice articles about firms that saw demand for their normal products dry up and figured out how they could take their equipment and the expertise of their people and produce something else. So you all probably saw the stories about distilleries turning to making hand sanitizer, but another student had one on an ExxonMobil oil refinery switching to make hand sanitizer since nobody wants oil right now. And a lacrosse face mask manufacturer who turned to making the medical face shields that were in short supply. And of course, inevitably the stationery maker turning to making bathroom tissue. And then a couple of students used behavioral economics to explain some of the weird shortages and hoarding that we saw at the beginning of the semester. So they did a really nice job with that. I am running out of time. So what I will tell you about my trade class is that the last week of the semester, I also gave them an assignment, 2 assignments, to come up with some articles on the particular countries they were following and also globally about what was going on in the global economy during the pandemic. And they came up with some really interesting ones on global supply chains, some odd shortages and stoppages that you wouldn't necessarily have thought about whether firms were likely to see their supply chains diversify geographically as a result of this. Is it the end of just-in-time manufacturing, et cetera, et cetera? There's my timer. And also how the pandemic is exacerbating inequality both within economies and across economies. And okay, Tom, I was close.
That's good. Thank you very much. The potato one has also hit the US now. And today they reported that there's 1 billion pounds of potatoes that apparently we have not eaten. So we're all going to have to eat a lot more potatoes or they're going to be thrown out. Very interesting. All right, so we're going to move from that to Josh, who's going to talk about some of his topics.
Okay, thank you. I'm gonna try to share my screen with you here. We'll see if I can get this to work.
Yes, that works.
All right, so let's do that. So there we go. All right, so I teach a class on economics of inequality. I'm gonna be teaching it in the fall. And so I want to talk a little bit about what I'm going to be doing in that class related to the current crisis. And in particular, in this little short presentation, I want to focus on sort of what kind of jobs people have and how that's going to affect how that affects how they're affected by the crisis. So ask some questions like, for example, oops, can't change the slide here. All right, that's the problem. Sorry. The slide, there we go. So how, who gets to work from home, right? So my assumption here is that working from home is a good outcome compared to other possibilities. For example, obviously losing your job or maybe having to work in some place that's unsafe or putting you at risk. So who gets to do that is the kind of question I want to ask. So if you look over at the left-hand side of the screen here, we have this Pew survey from about 6 weeks ago asking who has been working from home as a result of the crisis. So there we go. So all adults, 40% of people were saying they were working from home. But then if you look at, for example, some subcategories, so we see like well over half of people with bachelor's degree or postgraduate were working from home, but high school or less is only 1 out of 5. So I think the likely explanation for that, right, is the type of job that people of different levels of education have, right? So maybe if you have an office job or a professional type job, it's easier for you to work from home than someone with a job, for example, in a restaurant. Maybe you're more likely to have lost your job, or other jobs, you might be more likely to have to go to work still. You see a similar thing with income, right, where upper income people are about more than twice as likely at that time to be working from home as people with lower incomes, right? So, okay, a secondary question, who loses their jobs and income? This is from a different Pew survey. This one's from about a month ago, and this one is asking the question, have you or someone in your household either lost your job or seen a reduction in income? So first of all, it's 43% overall, which is a sort of horrific number, which illustrates sort of how deep this crisis has been. But even here, when you look at some subcategories, so for example, down here, we see that people that already had lower incomes are substantially more likely to have lost income and substantially more likely to have lost their job as a result of the crisis, right? So, okay, another question here might be who has to keep going to work even if it's not safe, right? So there are a lot of different examples of this, healthcare workers, obviously, but also, factory workers or warehouse workers has come up. So the example I chose here is meatpacking industry. There's one case in South Dakota that's gotten a lot of attention, where you see here there were 900 cases of the coronavirus in one particular meatpacking plant in South Dakota. As of a couple of weeks ago, at that time, there were only 1,800 cases in the entire state. It's a low population state. So you have this situation where literally 50% of the cases in South Dakota are connected to this one particular workplace, right? So it's just a really vivid illustration of how what type of job you have is going to affect your level of risk. So there's a sort of racial element to this as well. So there's a lot of anecdotal evidence that the effects of the virus is unequal by race. And so there are a lot of different reasons why there might be, but for now, I'm just focusing on the sort of work-related one. So this is still about South Dakota here. So in the state of South Dakota, you see here, this is just the demographics for the whole state. It's about 90% white, and it's obviously a little over 10% non-white. But if you look at the coronavirus cases there, this is the graph over on the left here, only about a third of the positive coronavirus cases in South Dakota are white and almost 70% non-white, right? So that's an extreme example, but it's also, I think, an illustrative one because you can clearly see how this is probably connected to the workplace issues, right? So this is where they had this, meatpacking industry outbreak, and the meatpacking industry is going to be disproportionately immigrants and disproportionately, non-white workers. There's a gender aspect of it that I plan on looking at as well, where again, men and women do different jobs, and that might sort of impact how they're affected by the crisis. So this is some research from a couple of years ago about care work in the labor market, and this is specifically low-wage work in the healthcare industry. So these are different types of jobs in the healthcare industry that are low wage, home care aides, nursing assistants, things like that. And you see over here, those types of jobs, low wage work in the healthcare industry are disproportionately female, right? And so then this is a story from a couple of weeks ago here. I'll move that back over there. This is at the time, it's about a month ago, 9,000 US healthcare workers had tested positive for the coronavirus, but about 75% of those were women, right? So you don't see this overall in all industries, but in the healthcare industry in particular, it seems that women were being at much higher risk than men. And so we would talk about how, that's related to the type of jobs in the healthcare industry that men and women do. So those are the kind of things I plan on talking about in my class. And thank you for listening, and happy to answer any questions about it.
Thank you very much, Josh. One of the questions that's come from someone is wanting to know which news sources how do we encourage our students to read the news, and what are we pushing in the classroom? So I personally, for example, I push, it's like you need to read something, whether it's New York Times, Wall Street Journal. I also, though, I tell them about a news source called Morning Brew, which several of my students who work in finance told me they read all the time. So that's like a 5-minute read that summarizes the articles. And I've gotten a lot of students to read that on a daily basis, and they know I'm going to ask them in the classroom. And again, I'm just trying to build that sense of getting them used to reading something, some relevant news source. What about you, Josh?
Yeah, that's a good question. I guess so. Obviously, I put some news articles in my presentation that I just had. I think I had one from New York Times, one from Wall Street Journal in there, a couple other ones as well. I guess for me, for my class on inequality, I guess I focus more on, even if you're going to use a news story from somewhere, I try to train them to look into where the numbers came from, right? So in a way, I almost try to use them to not use the original news story as a source, even though I know I just did it in my presentation. So you can usually sort of click through, and a headline generating news story probably has some sort of academic research behind it. So I try to emphasize getting them to sort of read that story, but then look at the research underlying it as well, and sort of try to find the original source as well.
Excellent. Jenny? Jenny.
Sorry, it took me a moment to unmute. So I have recommended or offered to get articles for them, depending on, where they were looking from, all the big ones, right? The New York Times, the Washington Post, the Wall Street Journal, The Economist. I've also given them articles from Project Syndicate, the Financial Times. For our policy questions, foreign affairs and foreign policy are usually a decent place to start, right? But I think honestly, a lot of them have been spending more time reading the news lately. But yeah, of varying qualities of sources. So yeah, we did discuss some of those in class.
So Jenny, while you're not muted, we also had a question about your talk, and is specifically one of our guests wants to know what happened to the agreement with China, their commitment to buy $50 billion worth of additional produce from the US. Are they on track with that or not?
No, so that was part of this little mini deal from November, right? And the overall deal was supposed to be that they were to up their imports from the US by $200 billion over the next 2 years. So for 2020 and 2021. And the latest trade figures for March were that US exports to China were down 23.5% on a year earlier. So what various people have been pointing out is that, well, look, this is supposed to happen over a 2-year period. It does not have to happen, a certain amount each quarter, but truthfully, we are way behind on that, right? We're far below what you would have expected to see if the deal were on track.
Yeah, okay, thank you. We just had a follow-on question that I think is really interesting. So wait, let me have Faisal weigh in on that before I ask this question.
Okay.
So what do you push in the classroom? How do you get your students to pay attention to the news?
Well, I tell them that you have to be informed, that you have to read, and it doesn't matter if you prefer the Wall Street Journal or you prefer the New York Times or you prefer The Economist, which is probably my favorite publication of them all, or the Financial Times, right? You have to be informed, and especially in a class like money and financial markets, maybe half to 2/3 of them want to work on the Wall Street, and you wake up in the morning, you have your morning coffee, you kind of have to catch up with the news to find out, and a fairly large chunk of them by the time that I get them in a 300 level course are well aware of that. And I have them depending upon the assignment, right, they have to back up their response to a paper by 2 or 3 independent sources, right? And I'm always impressed by, okay, I'll be fair, not by all the students, but by the sources that many of the students have, and then the way that they can use them. And by this point, quite a few of them have had 1 or 2 really good internships also, and their bosses to be or the bosses they had have really kind of hammered into them as well that if something has happened the night before, you had darn well better know about it. Yeah.
So we had an interesting follow-up question that this is going to be fun. So none of us mentioned Fox News. Or none of us mentioned the Hoover Institute or the Cato Institute or any of those sources. And so this person wants to know, do we see much conflict in the classroom over the validity of news sources?
Much conflict over the validity of news sources?
Yes.
No. With regard to Fox News, right? I do get a fair bit of stuff from the Fox Business News section, which is probably the most unbiased, part of it, right? With the recording. Now their basic editorial slant may well be one way or the other, but as far as it's a straight news reporting goes, that's pretty straightforward. With regards to something like Cato really doesn't do much news reporting as such. They have a lot more analysis, and that has a very, very definite libertarian a view on it. And Hoover also, right, theirs is much more analysis, and that also has a very definite a very definite, basic editorial slant to it. Yeah.
So Jenny or Josh, any comments on that issue?
I mean, for me, I guess that's part of the reason why, like, certainly, like in their written work, I urge them to go past like the popular media sources, and I just tell them, it's okay to read popular media. This is more for like assignments, I guess. It's okay to read a popular media source, but then when you want to, cite that in your paper, go through to like whatever study or data that's based on, right? So, I mean, if there's a story about what the unemployment rate was last month, it doesn't really matter which news source you're reading that in, right? And it comes from the Bureau of Labor Statistics, and you go there and get it, right? And so similarly, I mean, for any like major news event, I don't think it really matters that much what their initial contact with it is going to be. As far as like the think tanks and stuff, I mean, I don't really, it's a little bit different from a sort of news source. I mean, for me, I don't really have a problem with which think tank they're getting it from. But the one thing I do tell them is that if you're going to get something from the Cato Institute, or if you're going to get something from the Economic Policy Institute, which is a left-leaning research think tank type thing, either one of those is fine to use. But it's important to sort of know where they're coming from and what viewpoint these institutions have, and take that into account in your interpretation of the work.
Yes. Yes. So why don't we move on, and Faisal, why don't you give us a brief overview from your classroom experience?
Alrighty. This semester I've got money and the financial markets and economic development, and for a large chunk of the money and financial markets class, actually, right? We spent talking about the Fed's policy response to both the Great Recession and now to the Great Pandemic, and on why the Fed's normal kind of monetary policy tools are pretty much useless in a crisis like this. Normal policy tool being using the market interest rate to fine-tune the economy. And then we talked about the Fed's the non-conventional monetary policy tools, and so the slide you've got in front of you is the Fed's balance sheet. And you can see on the bottom of the kind of slide my little caption to this. This is from that's from the St. Louis Fed. Before the Great Recession, the Fed's balance sheet was about 0.86 trillion, jumped up to about 4.6 trillion by about 2015. The Fed had this gigantic array of non-conventional monetary policy tools where the Fed is lending to the commercial paper market. It is quantitative easing. It is lending to bond dealers. It's pumping money in like mad into the economy, right? And you can see how much money the Fed has pumped in there. Now, it slowly started unwinding its balance sheet very, very slowly until I look over here to the extreme right of the screen. You can see the cursor. Until about September of last year, when the repo markets, right, for the US Treasuries froze up. At that point, the Fed started to pump money into the repo markets, pumped in about $240 billion, give or take, right? So the crisis here started well before the current crisis. Now, if you look to the extreme right side, you will see where the Fed's balance sheet goes straight off into outer space, right, rocket. And the last 5-6 weeks, the Fed has pumped in approximately $2.5 trillion into the economy. And the best estimates are that the total size of the Fed's balance sheet by the end of the year will be anywhere between $8 trillion to $11 trillion. And my fear is that based upon what the Fed is doing, we are going to look like Japan. And I don't mean that we are going to look like Japan because we are in this 20-year long on again, off again kind of recession. No, we are going to look like Japan because, okay, take a wild guess. Who is the largest single owner of Japanese equities? Bank of Japan. Bank of Japan owns something like 5% of the Nikkei of, of the Japan Stock Exchange, followed by the Japanese government's pension funds. So, put them both together, they own pretty much about 10% of the Japanese stock exchange, right? So, what you see over here, right? All this $2.5 trillion being pumped into the economy, and this is on top of the 2.2 trillion fiscal stimulus, which we didn't spend that much time talking about because this was, money in financial markets. This was not, macro, right? Had I been teaching macro, we'd have spent a lot more time talking about that aspect of things. So this is, things like the money market mutual fund liquidity facility, where the Fed is, bailing out the money market mutual funds exactly the way that it did back in 08, 09. It is the primary market corporate credit facility for $750 billion all told. Most of that is the Fed, 75 billion of it comes from the Treasury, but the rest comes from the Fed. And this is 4-year long, bridge loans with a 6-month, so no interest window. And this is the term asset backed loan facility, another $100 billion, right? And these are like a non-recourse loans, right? Which means that if the loans default, etc., then the Fed is stuck with the collateral. Whatever the collateral is worth, right? But the Fed cannot go after the borrowers for the rest of the loan value. This is things like the Main Street Business Lending Program. Now, you may recall in the Great Recession, the Fed got a lot of grief for bailing out the big banks, right? So, Wall Street got bailed out and Main Street was left to twist slowly in the wind. So this time around, the Fed, being much better at public relations and putting a nice spin to it, specifically named one of their very large facilities Main Street Business Lending Program, right? Because they're not bailing out Main Street as well. Except that the Fed's definition of Main Street is very interesting. The firms have to have fewer than 15,000 employees. I don't know any firm on Main Street, quote unquote, that's got 15,000 employees, and sales have to be 5 billion or less. And the minimum loan size is at $10 million, right? So that's the Fed's definition of Main Street bailout. And this also had no payments for 1 year. So it's basically a free gift for 1 year. Now, given the size of the crisis, all this has to be done, right? And you've got the commercial paper, and you have the commercial paper funding facility, which in theory could be the biggest one of these new things that the Fed has put in place, because in theory it could be up to $1.2 trillion. Now, commercial paper is the short-term borrowing by the corporations, right? Up to usually 90 days or so. Theoretically up to a year, I believe, but up to 90 days, which the big firms use to meet payroll, this, that, etc. Right? Kind of like a line of credit, except that it's not from a bank, but they have sold your short-term paper for it. So we talked about what the Fed has done. Then we talked about, okay, so this one that you got over here is the U.S. stock market, right? The Dow Jones. And you can see the complete collapse, right? The biggest drop in U.S. market history, and you can see the sort of partial recovery that we have had, right? So as the CARES Act is announced, as the Fed says that we'll be pumping in another 100 billion today, that next week we'll be doing another 800 billion, et cetera, et cetera, et cetera, right? You can see the market slowly crawling back up. So we talked about that in many financial markets. And we talked about the dollar. So the dollar is the world's reserve currency. It's the world's safe haven. And you will notice in the top in the top chart over here, and the gray over here is the Great Recession, that as soon as the Great Recession spread outside the US, and you see it, showing up in, Western Europe, East Asia, etc., everybody flees to the dollar, right? It's a safe haven. And the dollar, takes off in value. Something like 45% of all world foreign exchange trading, the counterpart to that is the dollar. And most of the world's debt is in dollars. That big part, central bank holdings, etc., are in dollars. And the Fed is extremely concerned about making sure that the dollar, A, doesn't get too strong, and B, there is no dollar shortage in the world. So the Fed has, started the swap facilities with many central banks of the world. The Fed had $60 billion existing swap facilities with the European Central Bank, Bank of Japan, Bank of Canada, Bank of England, and the Swiss national banks. And so the Fed massively expanded that to about $750 billion. So the Fed exchanged $750 billion for that much of their currency to make sure that there is no worldwide dollar shortage. And that you can see over here in the lower chart, where the dollar has gone down a bit because the Fed has pretty much flooded the world with dollars, and not just the US. So that impact, and I can probably go on for those of you who are my former students, you'll know that I can just go on forever, but Tom is doing this, so I will now call it quits over here.
Thank you, Faisal. I'm sure we can come back to that if people have specific questions they want to hear from us. Okay. So one of the other interesting questions that's come up is that a guest said, I would like to hear someone discuss COVID-19 in terms of tragedy of the commons. Anyone want to take that one on? Like, Jenny, did that come up in your class? I mean, that's a pretty obvious principles connection or game theory.
Well, I was just going to say, I think the guy who teaches environmental economics should probably go for that one.
Yes. Okay. Let's come back to that in a minute. So this semester, I am teaching natural resource and energy economics, one of my favorite courses to teach. It's Econ 348. So I typically get students who, they're either juniors or seniors, and they're pretty on top of their stuff. It's a really fun class to teach. But one of the things I do, and every semester to try to get them actively engaged with a resource, is I walk into the class and I say, what's going on with the price of oil? And on the first day of the class this year, I'm going to show my screen for a minute and show where we were. So on the first day of class this year, which was in January, come on. It's hard to talk and share at the same time, it turns out. On the first day of class, we were back, we were right about here. Oil was trading for about $58.34. And, it had been pretty boring for the whole past year. It had been around $60 a barrel. And so, on that day, I gave my students the task. I said, okay, imagine you're you've been asked by the CEO of Southwest Airlines to make a decision on whether you should hedge your jet fuel by buying futures, by buying June futures. And I had them think about that and research it. So basically I'm asking them, is the price of oil going to go up or down? That's what it basically boils down to. And little did we know where we were headed this term. And, I just love this graph because this is showing the price of oil over the course of my class. It started out here at $58. Before they went away for spring break, we were already getting kind of interesting. So right about here, We were at, we'd already taken that drop. So we were in the mid 20s, and it gave us lots of opportunities to talk about supply and demand questions. What's going on? What's causing this drop? You know, not just COVID, but what particularly is going on in the world. And on the demand side, obviously, demand just cratered because people were all of a sudden not flying. They were not driving, they were not taking cruises anymore, etc. And so what we were seeing by then is there were already estimates that in a normal time, we were consuming about 100 million barrels of oil globally per year. And the estimates along this time all of a sudden we were down as much as 35 million barrels. You know, the demand for oil just started plummeting. And on the other side, the supply side, you know, it was a perfect situation to talk about. We had OPEC unwilling to cut production, Russia unwilling to cut production because for many reasons. But one of those, Saudi Arabia was kind of tired of taking the hit and having to cut production while other countries kept pumping oil. And so we talked about that. We talked about some of the specific issues there. And we talked about what would happen in the US. The US, 10 years ago when I taught this course, I used to say that the US was, we were basically running out of oil in the US. In the last 10 years, we've learned that I was totally wrong. So when Jenny Rostal, who's on this call, took this class with me, I was wrong. We had no idea that the US was about to become a major producer of oil. So anyway, we fast forward, the students go away, and I was actually really thrilled right here. Thrilled is a weird way to put it. This was April 17th of this year. The price of oil dropped from about $18. These are futures prices, dropped. They went to negative $37 that day. And it was actually one of my students in the class that first alerted me with an email saying, Professor Drennan, what's going on with the oil markets? Well, to a professor, I hadn't even noticed yet. So I was thrilled that my students actually were paying attention and you know, noticing what was happening. So this was a situation I never thought we'd see, where oil prices went negative. And again, what actually was going on there is this was for May futures, which meant that on this day, you either have to get rid of your futures contract or you have to take the oil. There's a lot of people that buy futures that can't take the oil, and so they were basically paying people to take the futures off their hands. So a really exciting day for an energy economist to see the price of oil so low. From an environmental standpoint, it's kind of a disaster to see oil and gas prices drop into, you know, $1.50 range, except here in New York and a couple other states, is kind of horrifying for a lot of other reasons that we were then able to talk through. What does it mean for the future of electric vehicles? What does it mean for greenhouse gas emissions? We spent a lot of time talking about, will demand come back, or is this somehow going to change the way we use oil? Have we learned that so many people are able to work from home and teach from home? Will we as a world not go back to 100 million barrels per day? You know, that's, at this point, I'd say, I think we're unlikely to go back to 100 million barrels per day. And so, you know, how's that going to work? And so there's just been a ton of fun discussion around that and the implications of that. And yeah, so that would be something fun to talk about with you all. I closed my, there we go. Okay. Let's see. So let's see if anyone has, yes, we have some more questions we can get to now. So I wanted to keep it so we didn't go too long, because we wanted to hear if you all specifically had other questions that you would want us to discuss. So I'll go back to that tragedy of the commons. It is a perfect example of this. We see in the United States right now, we see, New York, we're still closed down. We're wearing masks. We're social distancing big times. And, we're seeing a lot of the country opening up, and it is a classic tragedy of the commons. We don't know what's going to happen. I've talked to people in other parts of the country, and I have a brother in Arizona, and he does not get it. He does not know why we're doing this as a country. And so, it is interesting to hear that versus the perspective we have here in New York, which is just, pretty tragic. All right. So one of the other questions that has come up, can you all address how the recent bailouts, loan programs, stimulus checks, etc., conflict with fundamentals of capitalism? And will this change the way we think of U.S. capitalism? That's a really good question. Who's willing to take that one on?
Sure, I'll take a stab at it, unless someone else wants to.
Go for it.
Well, there was, one very large hedge fund manager whose name I am blanking on, but they've got about $125 billion in your total assets in funds, this, that, etc. And he said that, capitalism without bankruptcy is like Catholicism without hell. And before that, Schumpeter had talked about, creative destruction. And before Schumpeter, Karl Marx had talked about, the slaughter of the capitals, that you kind of need to have this occasional clearing out, right? And I'm not saying that in a crisis like this, you have to let firms go bankrupt, but the way that we have been backstopping kind of everything, and I don't mean now, I mean for the last, 30 years, ever since, Greenspan has been the chair of the Fed, right? So you had the Greenspan put, then you had the Ben Bernanke put, then you had the Janet Yellen put, and now you've got the Jay Powell put, where every time you've got something bad happening in the markets, the Fed massively intervenes. The Fed has kept market interest rates way too low for way too long. I had the pleasure many years ago of taking intermediate macro with Professor John Taylor, and he hadn't come up with the Taylor rule then for what the Fed's federal funds rate should be, but the federal funds rate was kept way too low for way too long. And very obviously now this is all hands on deck, and we're just going to keep shoveling money in until we have stabilized the situation. But I think that yes, you can't have capitalism without bankruptcy, right? And at some point we're going to have to figure out, but I don't know anyone. And I think personally, it certainly does not look good when President Trump throws a temper tantrum and the next day the Fed cuts interest rates. Now the Fed had other reasons for doing that, but it certainly does not look good because you have what looks like a very definite correlation. So yeah, I think I'll end this over here. But yeah, this is in one sense not good.
Thank you, Faisal.
So.
All right, so the next question that's come up is really asking, how are we doing with teaching online? How, have we lost some of our students? How effective is this? How are we dealing with it? So, I'll start. We're all doing it a bit differently. None of us were online teachers. That was not, that's not how we do it, of course. So this was a new experience to come back from spring break and have to make the switch instantly. Our students have been really wonderful, I'd have to say. Something that has surprised me is they always start off either their conversations on Zoom or their emails by asking, "How are you doing, Professor? I hope you're doing okay. I hope your family's okay." So the level of concern and just empathy is really, really refreshing. They're so polite. It's really nice. I say I have about 75 students this term, and there's only about 5 of them that have kind of disappeared. And you know, we've all been following up with our students who've fallen off the that have disappeared on us, and some of them are responding. Some of them, you know, there's reasons they're not responding. We get the deans involved, etc. You know, we're doing a lot of reaching out to our students to make sure they're okay. And so yeah, in a normal semester, I'd say I'd lose 2 or 3 that kind of disappear. I'd say I probably have lost about 5 out of 75 now. And in general, some of my students are doing really well. They're because they actually have a lot more time. So some of their final projects are going to be very impressive. But then we have some, on the other hand, who are not in an environment that's conducive at all to academics, and you know, we're being flexible with that. Anyone else want to add to that?
Could I?
Yes.
Could I jump in? However, I have to be careful because one of my students is here, and Hrithik may jump in and say, no, she's doing a terrible job. I do not love teaching online, and no. I miss the interaction, and my students do as well. We've all talked about it. Kids I thought would never miss being in the classroom say, oh, if we could just be back in the classroom again. So it's been great. I have been lucky because anybody who was still coming to class at spring break has not disappeared off, even though, as Tom said, they are in a variety of different situations. But I've told both of my classes, I have been so impressed because, you know, this is miserable. And I want to throw a temper tantrum sometime and just say, I don't want to do it. It's too hard. It takes too much time. But they have been phenomenal. They have all stuck with it. They basically just said, yeah, this is miserable, but they pulled up their socks and they have just been calm and patient, as Tom said, patient with me figuring things out, trying to learn new things, very concerned about everyone. I've told both of my classes, I feel really lucky to have been working with them this semester. And at some point, should distancing restrictions be eased, I'm having them all over for a cookout because I feel we will have gone through an experience together and it deserves to be celebrated.
Yeah. One other observation, my funny story that I like to tell on this is one of the strange things that I'm finding is we're finding ourselves in our students' bedrooms, their living rooms, their outside environment. We're seeing a very different side of our students. And my one funny thing that happened is we can send our students into breakout rooms on Zoom and you know, give them a question, send them off to a breakout room, and the professor can pop into the different rooms. And I popped into one room, and there was one of my students with his head on his pillow in his bed. And he was like, oh, hey, professor, how's it going? I didn't even get out of bed for class today. And it's like, and he never did. He just stayed right there. He was comfortable enough just to lay in bed. And I left the room. Yeah. So, Josh or Fessel, any funny stories or other?
You know, I have to agree with Jenny. I've been really, really impressed by my students. And the funniest story, okay, right? You know, one of my pet peeves is the number of students who have their video turned off. So I just have this, little, black box with the name on it. And it feels so strange because I've got, thing. And so I said something about that. And one of the students then, turned his and the video back on, and he was exactly what Tom just said, in his bedroom, lying in bed wearing some kind of, dirty old sweats, whatever, and he had his laptop or his tablet up like this thing, and said, okay, why don't you turn yours back off? So
Yeah. Yeah.
yeah.
All
So,
right.
but I mean, I've had students, two of them, actually apologized to me for doing badly on a test because they said, I just found it really hard to study because they had all sorts of things going on, right? Family, this, that, etc. And I'm so sorry because, I like the class and didn't want to do well, but it was me. That's why I did badly on this test. And there've been, not all, one or two honorable exceptions. They've all been extremely, other than that, they've all been extremely motivated, dedicated. They show up for the Zoom classes. They ask questions. We get discussions going back and forth. I have a few who, this is more for economic development, right? To argue with me, politely, but yeah, so I have, probably 43 students, 44 students this semester, and they are a really good group.
And then Josh, I'll just let him speak. Then we have one more question, and we want to wrap this up within the next couple of minutes. Josh was actually leading an off-campus program when this whole pandemic hit. So Josh, why don't you just share that experience quickly?
Sure. Well, I mean, that's a little different. It was obviously a little bit of a different situation. So I haven't really done too much of the online stuff just because I was abroad and I was only teaching one class. And due to the structure, it was going to be over in 2 weeks after we left anyway. So this sort of, unique aspect of that was just, we were in Ireland, just sort of dealing with the abrupt ending, and everyone was a little bit sad, but they had a good experience. And, they were all traveling all over Europe every weekend, which became increasingly stressful to me as the semester went on for obvious reasons. But everyone got home safely, so that was kind of the main thing there, I suppose.
Okay, thank you. So the last question we can get to then is referring back to the news sources, and are different news sources based on their biases presenting different data, or are they interpreting the same data differently? What do we see on that? So I think it's more, I mean, this is where statistics is really interesting, right? Because they will often use the same source and the same statistics, but they're able to put a very different spin on them. And so sometimes you're able to talk about that and show that in the classroom, where you're like, okay, this news source, same data, spun this information this way, and this one did this way. And it could be as simple as just changing the axis that you're looking at. And it's really interesting when that happens, and you can see, oh yeah, because of changing the axis, you can make it look the way you want to look. And really trying to just teach students how to be alert to those types of issues and that data manipulation. So that would be my experience with that.
So I'll say something about that too. So I mean, I talk about that a lot in my my class on inequality, because I mean, I just gave you a little taste there. So when we talk about a lot of subjects that people are going to have very strong opinions about, we just got into a little bit on inequality of gender and race, and by, different jobs that earn different amounts of money and things like that, right? And, it's a fine line, because on the one hand, I want them to look at data critically. On the other hand, you don't want to have a habit of dismissing data that doesn't suit what you want the answer to be, right? So there's a very, I try to sort of illustrate both of those, opposite points, right? So just maybe to give some quick examples. So you could look at, different incomes that men and women earn, and there's clearly a difference there, right? So there are a lot of different theories trying to make sense of that or explain why that is, and they're going to use different evidence and try to maybe use that word, spin it different ways to try to explain it, and maybe you find some of those more convincing. They're all using data to back up their point. But you can't just say, well, there's no issue, there actually isn't a different average income, because there clearly is, right? So, I mean, on the one hand, you want to be careful. And what I try to emphasize is sort of those two sort of maybe somewhat contradictory points of, yes, we should look at data use skeptically and try to understand where people are coming from and how they're presenting it and how they're making their points, but also, again, to be careful to use data in our arguments and not just sort of dismiss it because we don't like the answer that it's giving us.
Yeah. We've actually come to the end of our program. We need to wrap it up now. I want to thank you all for joining us today. This was a lot of fun, and we're sorry there's a couple questions I didn't get to. I'm sorry about that. You know we love connecting with our former students, though. Please don't be shy. Let us know what you're doing. Reach out, and of course you can always find us through advancement. Chevy alumni relations at hws.edu is a great way to connect, and hope you're all well, and thank you again for joining with us today, and thank you to my colleagues for agreeing to do this during reading days. Finals start tomorrow.
Thank you for
all.
organizing.
Thank you all.